All right, it's 7:04. I understand there are still some clients who's not yet in yet, but not to worry. I will be starting with a very short introduction of some of the promotions first, which I will also repeat at the end of the session. So I will just make a very short intro to begin our event today. All right, before I hand the time over to Xun Xiang to share more about the ETF. So once again, thanks everyone for joining us tonight for this evening's this seminar and webinar, all right, hybrid event. That will be sharing on this LionGlobal's very new and first Singapore physical gold ETF, right, which he will share more later. Okay. Okay, so first up, very straightforward. For this particular new ETF for the IOP period, which is this launch period, there is this ongoing promotion. First thing, of course, there is no transaction fees, means there's no commission. There's no fee to transfer to CDP as well. So as long as you are a cash management account, cash plus account, no issues, you can purchase and participate in this ETF IOP with no fees. If you apply up to minimum of 5K, you will get $12 Sing. 5K is in US dollar. Later, Xun Xiang will be sharing more. But 5K worth in US dollars, you get $12 Sing, up to a maximum of $600 for the application period. And the first 20 that subscribe 250,000 US dollar value will get a 1 gram gold bar in addition. So you get 600 plus a 1 gram gold bar. And it's only for the first 20. And just to update you, we already have some redemption on this gold bar. So if you want to be the first 20 and you're not sure how to do it online, you want to find help, later you can look for our colleagues or my staff outside. All right. And for this event only as well, we have a seminar exclusive promotion. For the first 20 physical, which are here physically, if you're on Zoom, I'm sorry. But those here physically, you have a chance, if you apply 10,000 worth in US dollar, in value, you will get a $5 fair price voucher on the spot. And you will still get the $12 times 2 later on. But on the spot here outside, you will get a $5 fair price voucher. All right, so I already have some of my regular clients that indicated their interest with me. Outside, we will have a form to indicate who are interested later. All right. Next, also just to share, if you have not yet done so before already, or maybe those that are here, you came with your friend, if you don't have an account yet, if you open an account through a referral or you refer your friends to open an account or family members, you can get up to $600 per account referred. Right. So once you make them open an account, you get $10 already, and $50 if they fund the account of minimum 1,000 in 14 days. But you must first generate your unique referral link, all right? Not word of mouth. You must generate your link and give them. So how do you generate a link? You can scan a QR code, enter your account number, you will get a referral link to share out. All right? Okay, so I will hold for a few seconds and I'll go next. Okay. So also, just an ongoing promotion that we have is that now if you trade on Singapore Depository Receipts, SDR, which is now beyond only in Thailand, now also have a lot of Hong Kong counters inside. If you trade any of the SDR, the more you trade, you can trade and earn up to $300 on a monthly basis based on the value that you trade. The more details can be found on our website on the poems.com.sg under promotions. But you can also claim a $10 SDR coupon on the Poems 3.0 app under the rewards tab as well. So if you trade, even if you don't meet the criteria for the higher rebate, right, you can get also $10 SDR coupon if you hit the minimum criteria, right? And for financing itself, currently the rates have slightly been reduced and market interest rate have been a bit more stable recently, but it's still on a downtrend in general, and we expect more corrections or interest rate cut to come, but not sure exactly when. Right, but right now Singapore is at 3.2% for financing, 5.88% for US dollar. Right, so if you trade in Singapore market through the Singapore or US dollar denominated holdings, and you wish to use financing first, all right, to finance the investment, to not miss the market opportunity, this is the rate you can look at if you open a margin account. If you're not too sure, you can check with our colleagues outside and see whether you wish to use a margin account or use your normal account also can. But normal account does not have the margin facility at this rate. Okay, so next we have our Telegram group. So you can just scan the QR code and join our Telegram group if you have not yet joined yet. We do provide some updates of the market and the news to give some insights of what we view. All right. And also for our finance debate, while those are taking the QR code, in case everyone do not know US market is going to enter into the DST, Daylight Saving Time, next week onwards from 9th of March. So in case you're also in the US market, it will affect you, and it also affects the Singapore listings of the related stocks as well. Okay, so without further ado, I'll pass time over to Xun Xiang to share more about this exciting new ETF offering from LionGlobal. And put hands together to welcome him.
Yes. Good evening, everyone. Thank you for joining us today. And today's weather outside is a bit like the geopolitical climate we see. Very rainy, very stormy. So I'm happy that to see all of you here. You made it through. And also I hope you enjoyed your dinner, Friday dinner. And thank you, appreciate the time. So I'm here to share with all of you about Singapore's first gold ETF, backed by physical gold that is insured and vaulted in Singapore. So many other gold funds, they bought their gold in US or UK. They have seen histories of gold confiscation. So that's why we choose to vault our gold in Singapore and so insure them against loss, damage, and theft while in custody and transit. So these are the key points to remember about the gold ETF, which we will be sharing about. And for some of you who don't know me, I'm Xun Xiang. I head the ETF business at LionGlobal Investors. And LionGlobal Investors, we are part of OCBC Group. We have been around for 40 years. It's our 40th anniversary. And we are one of Southeast Asia's leading and largest asset managers. So we started our ETF journey back in 2017. And this is where I will start my first price giveaway question to keep things more lively and also more interactive. Maybe this time I start with the back. Very, very simple question. The question is, how many ETFs have we listed so far? You can count based on the number of pictures here. Yep, to the... Yes, to this gentleman. Yes, 10. I will pass you. Yeah. 10. It's a stain remover pen to help you remove stains. So I think having a stain remover pen, it can be important because there can be cases where you can easily get stains somewhere. Is how it works, and it's also a bit like gold, right? So there can be cases where sometimes in your portfolio you need to scrub it clean, and probably having gold within your portfolio can serve as better insurance. So within our so far we have listed 10 ETFs, and we are already the ETF issuer with the highest number of ETFs on the SGX. And our ETFs are also ranked within the top 10 ETFs held by retail investors like everyone, including myself. 3 of our ETFs are within the top 10 held by retail investors. We zoom into the segment of SRS investors. Our ETFs are also within this category of top 10. And in terms of trading volume, our ETFs also rank within the top 10. So for example, our Hang Seng Tech ETF has been the top traded ETF by volume for 4 years, for the past 4 years, from 2021 to 2025. And for our REIT ETF, it's been the top traded REIT ETF for the past few years also. And all these are because each of our ETFs, we have at least 2 designated market makers. Most ETFs, they only have 1. We make sure liquidity is optimized and we at least have 2. In fact, some of our ETFs even have 3 designated market makers, like the recently listed short duration bond active ETF. And this gold ETF will also have at least 3 market makers to be able to keep it tight in terms of bid-ask spread. So some of you now might ask, actually, why gold now? Why invest in gold now? Basically, 3 key things, 3 key points to remember. Just remember 3 letters, CD and L, CDL. So first is in terms of C, central bank demand. Central banks have been accumulating gold massively over the past few months, especially, and in fact, in the past 1 to 2 years. So they have been massively accumulating gold, and we expect this trend to continue. It's a long-term trend. Second is on de-dollarization, where institutions are diversifying away from the US dollar due to the geopolitical tensions and uncertainties that have been observed within the world. And third is about L, which is long-term store of value. So gold has preserved value and preserved purchasing power for more than 5,000 years. It's the oldest safe haven asset that's been present. So C, D, and L. And maybe I run through a brief history about gold. So for the past 100 years, right, if you notice from 1925 onwards, there have been numerous histories of gold confiscation. So key example in US, and this happened back in the 1930s, where the government actually forced different citizens, US citizens, to sell back their gold to the government at a very low price. And this also happened in the UK, where gold ownership was restricted. So there have been histories of gold confiscation around the world. And the significant change within the history of gold happened in 1971, where the US dollar was no longer backed by backed by gold due to its removal from the Bretton Woods system. And since then, gold has increased in value significantly because the US or many other governments can print their money away from that. So because of this, gold is the ultimate safe haven and also the tool to preserve purchasing power. And paper currencies have, because of this, depreciated against gold, while gold has been appreciating, while paper currencies have been falling and depreciating. And some of you might be wondering, actually, in terms of gold prices, they have risen a lot and all these. Actually, compared to history, the recent rise in gold prices haven't been that much. They have been modest compared to what happened in the 1970s or even in the 1990s to 2000s. So all these are actually showing that there are a lot more room for potential capital appreciation for gold. And in periods where equity valuations are elevated, for example, like now where US equities are trading quite high at quite high valuations, gold tends to perform better. So gold has risen by around 68% in 2025. And with more geopolitical uncertainty being built up, there's actually a lot more long-term demand, pent-up demand, all being slowly spread across the next few months. We have already seen, based on past data by World Gold Council, how central banks have been accumulating gold. I will share some of these later. So all these are catalysts for gold prices to further go up and up. And since year 2000, there have been 10 equity market corrections. So this is where I'll have my next price giveaway question. Very simple, you just along this line, look at what is downwards. So how many out of the 10 equity market corrections, this time I'll start maybe in the mid-row, how many out of the 10 market corrections have gold generated a positive return? Yeah, to this gentleman in the red. Yeah, 9, yes. So gold has generated positive returns in 9 out of 10 equity market downturns. I mean, it's not 100% foolproof insurance, but it has generated positive returns in 9 out of 10 equity market downturns. So it has been actually a better quality portfolio insurance, even compared to bonds, which have been traditionally seen as safe havens and all these. And in fact, we did a further study. If you hold a 50% global equities portfolio and 50% US bond portfolio, you just allocate 10% to gold. What you find is that there's actually higher returns, but at lower volatility. Higher returns at lower volatility is the phenomenon we observe for global portfolios. And if we look into the Singapore context, same thing, 50% Sing equities, 50% Sing bonds, you allocate 10% to gold. Same thing, you notice that in higher returns, but at lower volatility. So it actually helps to cushion and provide portfolio insurance for the entire portfolio and provide diversification benefits. And this is where you get higher risk-adjusted returns for your portfolio by making an allocation, a small allocation towards gold. And central banks worldwide, they have been increasing gold reserves. The more significant countries are Russia, China, India, but there are also countries that have shown the high percentage increase in gold for the past 5 years. For example, you look at Turkey and Poland. You see, for Poland, they more than doubled their gold reserves in the past 5 years. It's significant. And all these are illustrating that a lot of the central banks and governments, they are slowly diversifying away from the US dollar. Because for them, the US dollar right now is gradually being less of a safe haven asset. Although it's still the world's reserve currency, it's gradually being perceived as less reliable. And this is where actually, when there's all these tension, geopolitical risks, all these coming, this is where gold comes in. When US dollar allocation is reduced, gold allocation increases. So you notice for past 25 years, gold has always been at a lower percentage of global reserves compared to US dollar. But all these changed in August 2025. For the first time in 25 years, gold actually exceeded and outweighed the US dollar as a percentage of global reserves. And since then, this yellow line has been going up and up, like the song Golden, where things go up and up and up. So it's significant. First time this has exceeded US dollar. And also as a long-term store of value, gold has preserved value for more than 5,000 years throughout centuries. So while the US dollar over the years, since the GFC, which is the global financial crisis, remain quite flat, US dollars has depreciated against gold, especially in the past 16 years. And the same thing has happened actually for the other currencies, Euro, for Japanese yen and Sing dollar, even our very own Sing dollar. Gold has appreciated against paper currencies. So it's important to hold gold as a long-term store of value to preserve purchasing power. So in short, 3 key things to remember. Gold and allocation gold helps to increase risk-adjusted return for your portfolio. Gold is a safe haven during times of inflation, in terms of crisis and geopolitical uncertainty. And gold provides long-term value preservation. And there's a lot of different ways to invest in gold. You can buy physical gold, but you are subject to high bid-ask spread. And so you have to go and also you have to queue. And this is where actually we have developed infographics to show that it is simple to get gold. All of you would have it within your brochure in between there. So I think there are different ways to get gold. You can go and get gold by UOB Bank, get a queue number, or even appointment number, or even queue at different bullion dealers like Silver Bullion, Bullion Star, all these. Or you can choose the simple way. You buy a gold ETF on your app. Don't need to do visits. You don't have to wait for the store to open or collect queue number. You can just buy on the app. And right now, during initial offer period, even when you buy, you still can qualify for client incentives. So I think it's quite a good deal and also a simple and efficient way for you to be able to access gold. And I'll share a bit about our ETF. 3 key things to remember. We vault all our gold in Singapore because it's geopolitically neutral, 0 history of gold confiscation. Most other gold funds, they vault their gold in US or UK. You have seen in the first few slides, they have had history of confiscation in the past century. Singapore is geopolitically neutral, AAA rated, and if confiscation really were to happen in Singapore, I think the whole world will be chaotic. Second, we fully insure our gold holdings against loss, damage, and theft while in custody and transit. So this means, right, for example, once gold reaches Changi Airport, it is stored in Le Freeport, which is a few minutes drive from Changi Airport. During this period, there'll be an armored vehicle driving the gold with armed guards from the airport to the vault. It is also insured during this period. So while in custody and transit, it's actually insured. not many gold funds out there insure their gold to this extent. And we fully insure all our physical gold holdings to provide added and extra assurance. And third thing, our total expense ratio is actually slightly lower at 0.39%. GLD, which is the currently the only gold ETF on SGX, they charge 0.4%, but they bought their gold in US and UK. We bought all our gold in Singapore, we fully insure them, and also at the same time, you are getting a better deal, slightly cheaper, 0.39% for total expense ratio. So these are the three key things to remember. And because the underlying goal we have is also similar to what many other gold funds have, because gold is tradable globally. So the liquidity is expected to be similar. GLD only has 2 market makers. We actually have 3 market makers. So maybe the liquidity might be even better. We won't know until listing day. But all these are backed by gold, and gold is tradable globally. And if we compare with different other gold investments out there, right, our gold ETF is a MAS authorized scheme. So means we pass the higher and stricter standards by MAS. GLD was incepted more than 20 years ago, and they are incepted in the US, domiciled in the US. They are cross-listed here. Ours, we are purebred Singapore. We pass the highest and stricter standards of MAS. I'll tell you why I mean higher and stricter standards later. Second, our gold is fully vaulted in Singapore. Many other gold funds, you notice, bought their gold US, UK, or even Hong Kong, which is actually considered part of China. And third, we fully insure our gold. And I'm quite confident of saying this, we are probably one of the few, or even the only ETF out there that fully insure our gold against loss, damage, and theft, while in custody and transit. It's a very rare feature because we do that to add this extra assurance to investors. And in terms of investment grade physical gold, we hold our gold mainly in 400 ounce bars. So this is around 12.5 kg. Each of them is roughly worth USD 2 million. We hold them in 400 ounce bars for efficient storage. And when we talk about physical gold bars, investment grade, this also means all of them have serial numbers. They are uniquely identifiable. They have serial numbers, binary names, all these different things inside to ensure that it's easy to identify them. And we store them and bought them in Singapore because it's a AAA rated jurisdiction. There's very little risk of natural disasters compared to many other countries. Singapore is stable and also geopolitically neutral. And all of them, they are vaulted in Le Freeport, Singapore, which is a few minutes drive from Changi Airport. And for some of you who read the prospectus more deeply, you'll notice there's a difference between allocated gold and unallocated gold. All gold funds need to hold unallocated gold, regardless of whether they disclose in the prospectus. GLD, they do not disclose that within the prospectus because probably they are based on US standards that are, and also incepted more than 20 years ago. Unallocated gold basically means spare change. So allocated gold, remember I mentioned, is we hold our gold in 400 ounce bars. But what happens if there's a case where actually you only have cash that's around 399 ounce? You cannot use it to go and buy a 400 ounce bar. It's not valid. And this kind of spare change gold means it's unallocated gold. Once it hits 400 ounce, then we will just convert. So the allocated gold, which is the uniquely identifiable ones, they are all fully insured. The unallocated gold roughly is around 1%, the entire fund. They are also insured. And we will maximize our exposure to allocated gold because we want to build and optimize the exposure to gold for our investors. And this is the key thing we disclose within the prospectus, and we abide by stricter standards compared to many other gold funds out there. For example, those that are in US, UK, they might choose not to disclose because regulations are a bit more relaxed there. But for us, we disclose it to the full extent. And in terms of insurance, if we compare to many other gold funds, for example, there's one, in fact, in Malaysia, they do not fully insure their gold. Value Gold is also one within Hong Kong. All the gold is vaulted beside Hong Kong Airport. They also do not fully insure their gold. And even for the larger ones like Spider Gold or iShares, they also do not fully insure their gold. but we fully insure our gold. It's an added feature, but remember our total expense ratio is actually lower despite offering this full insurance. So this is where we try to add greater value, greater assurance. And some of you might be thinking, yeah, I won't buy, maybe I buy a gold bar, I can feel it, it's more tangible. Actually, I also have a live gold bar with me, 2.5 grams. And actually, I paid a beta spread of 14% to go and buy this thing. I bought this at a bullion dealer. I paid 14% beta spread. But if I were to actually just buy an ETF, my total expense ratio is only at 0.39%. I don't have to pay such a high beta spread. And the smaller gold bar you get, the higher beta spread goes because it's less efficient. And at the same time, after buying the gold, the next thing is you have to think of where to store, where to vault, and also where to insure. I mean, if it's small gold bar, then okay lah. But if it's a large gold bar you buy, then there are all these concerns. There are all these logistics to consider. And so these are the key benefits of a gold ETF. Think of A, C, and E. A gold ETF is accessible. You can invest, you can trade in as little as USD $5 per unit. Ours is USD $5 per unit. GLD is roughly trading near 500 USD per unit. So we are almost 100 times lower in terms of entry point. Second, in terms of convenience, you avoid the logistics in terms of finding storage, finding insurance. The ETF will take care of it for all of you. And third thing, it's also more efficient. I mean, USD $5, you cannot use it go and buy a gold. If you buy it, it's a fake gold. But through ETF, you can buy an ETF unit that's backed by physical gold. So remember, accessible, convenient, and efficient. These are the three key benefits provided by a gold ETF. And our ETF is actually the ETF share class of an existing fund, which we have already launched back in 1st of December 2025. Since then, the performance has been, as of 31 January, has achieved more than 18%. In terms of return, our latest AUM is more than 500 million Sing dollars. In 3 months, we have reached 500 million Sing dollars. And we expect to be a $1 billion fund probably in the next few months with more and more institutional investment, external institutional investment. And as of 31 Jan, the unallocated goal is 1+%. As of 27 Feb, this percentage is much lower compared to probably much lower, around 1.2, 1.3%. And we expect to lower this unallocated gold exposure because we don't really, once we grow our fund bigger and bigger, this amount will get lower and lower. So it's what we expect. And in fact, if we compare with many other gold funds out there, like Spider Gold or the European ones like Pictet, all these, the performance actually is comparable because actually all of us, we track the same thing, which is the LBMA reference prices and all these. And if it's ETF, we track the real-time gold spot prices. So all of these is actually similar, except for the size, which we hope to cross multi-billions, and we are confident we can do that because of the long-term structural drivers for gold. So this is where I end with my last few slides. Key things to remember. The initial offer period happens today until 20th of March. It will be listed on the SGX from 26 March. So between 6 to 20 March, the subscription can only be in cash. After 26 March, it can be in cash and SRS. So if you have SRS additional, you can even buy. But during 6 to 20 March, any incentives will only be cash. And this where actually I will have some prize giveaway questions for to help everyone remember what the key things, key messages. So this time I maybe start with the front. So what is the Sing dollar SGX ticker to remember? This gentleman? Yes, GLS. S stands for Singapore. Some of you might remember GLD. D and S, they are just beside each other on the keyboard. We hope people remember GLS more because it's the Singapore version. My next question is even more interesting. What is the USD ticker? They're open for all. USD ticker. Yes, the GLU. U stands for US, stands for U, and also sounds like glue. We hope investors are attracted to glue and add this glue within your portfolio to be able to further have that offer diversification. Yeah.
$2 US dollar.
Because the US dollar will be used to. Because we have both, because different investors have. Different investors have different needs and preferences. That's why we offer both. It's fungible. You can convert. You can buy GLU, sell GLS. Yeah. Later I tell you lah. But I think in terms of what we recommend, because different investors have different preferences. Because some of you might hold more US dollar, then it's better you just use your US dollar to buy. Some of you might like myself, actually we hold more Sing dollar, then just buy the Sing dollar once it's listed. I mean, there are all these things to consider. But actually for the initial offer period, the subscription will only be in US dollar. There's a reason, because the goal is we buy is priced in US dollars. So we have to collect US dollar to buy the gold, which is in US dollar. Yeah, and there will be exchange differences. So these are things to consider. And right now, which Huanzi already shared earlier, so during the initial offer period, there's high incentive and promotion happening from 6 to 19 March. For every 5K USD invested, you get Sing $12, up to a maximum of Sing 600. And if you are one of the first 20 subscribers with 250K USD invested, you also add a 1 gram gold bar. So I mean, these are the things to consider. These are the sweeteners we have, because I think gold is really a strong value proposition for in terms of the safe haven benefits, offers diversification. There are 3 key drivers: central bank demand, de-dollarization, and also is a good long-term store of value. All these are the structural trends, long-term trends backing in. And we hope you consider GLS and GLU within your portfolio, while also at the same time take advantage of these ongoing promotions from 6 to 19 of March. Thank you, and also open the floor to more questions.
Okay, thanks. Yeah, so I think we'll open for questions. All right, so I do note that there's one question there already. So not to worry, later we'll be walking around also to ask questions, and then Xun Xiang will be answering for you. All right, but let me just take a question first.
Yeah. Sorry, is it one? Yeah, it's still existing. It's actually two different share classes within the same fund. So the ETF actually will have the exposure to the same underlying gold portfolio, like the unit trust. So there are differences between the unlisted and listed version. The listed version, you are able to trade it on the SGX. There's real-time liquidity, real-time pricing. But if you are one who doesn't want to take FX risks, only the unlisted share class has this Sing dollar hedge exposure for you to cushion yourself against the USD versus Sing dollar FX risk. So for Sing dollar hedge exposure, it's still unlisted class only. But if you prefer pure USD unhedged exposure, then probably the gold ETF version could be better, because you still are able to take advantage of liquidity to be able to trade in and out of the market daily.
But your gold fund as the unit trust is still liquid.
The unit trust, the underlying gold is liquid, but you can only buy and sell through distributors daily, once daily. But ETF, you can buy and sell like 10 times, trade in and out if you want. So this is the flexibility an ETF offers. And at the same time, I think for unit trust, because of Sing dollar hedge exposure, not many gold funds out there actually have this kind of Sing dollar hedge class. Because for, let's say, a global house to go and do Sing dollar hedge share class, they have to get a lot of different approvals. But because we are Singapore headquartered, we are Singapore incorporated, and we are also part of one of the few largest banks within Singapore. So we are committed to Singapore investors. So that's why for unlisted, we created the Sing dollar hedge share class. But to offer investors an alternative way, and some investors might prefer a more liquid way to trade in and out for, then this is where actually we offer a gold ETF version for investors to consider. But both of them, unlisted, listed, they have exposure to the same underlying gold portfolio, and they are backed by gold.
And just to add one more point, funds, you don't know what price you're getting, but ETFs, you can look at the gold price and then you buy at the moment. So that's it.
I think it's like cyclical Yeah, so I will just take over for a very short while just to showcase some very important slides for you all in case you are interested and excited to apply for the ETF. Right, so basically right now, right, this is the steps to apply from Poem's account. All right, so later there'll be screenshot, don't worry, this is just a verbal way of saying it. The key thing to note here is that it's already open to apply for the IOP, and it will close on 19th of March for our subscription through Poem's platform. Right, so I might know that some of you all might see the newspaper and stuff. You might see that OCBC site for LionGlobal end is ending on 20th. Of our Poem site, right, Phillip site will be ending on 19 March. So you need to be funded for the account in US dollars. So if you're not sure how it works, right, if you don't have US dollar, not sure how it works, you can check with our colleagues outside to see how you can still apply. Don't need to worry. The account is able to convert the currency if needed to US dollar to apply, or just leave it in Sing dollars and auto convert. Okay, so this is also details also in table format. The key thing also another one is 100 units is the minimum quantity in multiple, so 100, 200, 300 for the IOP period. But once it is listed, the trading quantity is 1 for lot size, right? And there's no commission for this IOP period. And the trading currency is SGD and USD, but for IOP is US dollar. And you'll be fully allocated. So not to be like the IPO, you apply for 10K, 20K because you're scared you get allocated less. This one is fully allocated. So don't apply more than what you want. Just apply what you want. Okay, and this will be the screen on the Poem's website. So you first click on the account management, then you click on stocks, and the online forms. You will then see this online irrevocable form. Okay, when you click on it, they will always ask you for some update. You can skip it on, don't have to do it. You can skip, and you confirm that you skip the update. So then you reach to this screen. Right, so this is my details, right? Okay, I hide my address, but your details will full in address also will show up. Right, so your details will show up. Then you click on the name, click on this name, it will be highlighted, and click on apply. After that, you will see this screen, and you indicate how many to apply. Do note that compared to the usual IOPs, this is not $1 to $1. This time is 1 share for $5 US. So you invest 5K, you put 1,000. You invest 1K, you put 200. Right. Anyway, not to worry. When you indicate ready, there will be a gross payable update here. Okay. And do note that if your trading account is a cash trading account that is linked to Gyro, you will not be eligible for this IOP. Okay, so pick the 2 declaration and then key your password to confirm. And then you will see this confirmation screen of what's the amount. So in this example, I put in 5,000 units, and thus the amount payable is 25,000 US dollar. So you see is here. Settlement currency is in US dollar. All right. And do note also here, they also show that you need to be funded for the account by 19th of March, 5 p.m. 19th of March next is the Thursday lah. Okay. So you can also amend amend the order. When you click on the application status, click on the name and amend. Okay. So this is the snapshot of the promotion again. So now we will carry on with the Q&A. Yep, sorry.
When is the TFF settlement in the clock shutdown?
Okay, so I think the question is when the initial launch is $5 OP, what date is it benchmarked to, and will it drop on the launch date?
Actually, I mean, whether you will drop on launch date, no one knows. But the thing is, we will, as soon as, because we will receive most of all the initial offer period money, subscription monies on 20th of March. As soon as we receive, we think the price is actually quite okay, we would try to deploy all the monies on the 20th of March. And I don't think gold will drop 60% from $5 to 26 March. So because we will try to buy most of the gold on 20 March. And if you notice, actually 18 March is FOMC. So that's why we already have a few more days after US FOMC to be able to let the dust settle in. And we end on 20 March for initial offer period. Once we receive the monies, ideally we'll deploy all the subscription monies on 20 March. If we think the market is too volatile, we have the flexibility to be able to deploy on separate tranches, for example, on other weekdays before listing on 26th of March.
Yeah, so in case you missed, the listing date is 26th of March, all right, on the trading ability, and you can trade in cash and SRS as well. Okay, so there's also online questions. If there's no more physical questions for now, I mean, move to the online questions. So one of the first questions that we received was, I think you indicated or mentioned that gold can be a growth opportunity. So depending on how high the price is right now for gold, will you still consider gold as a growth category? And why are you confident in that?
I think for gold, think of it more as two things: portfolio insurance and also as a way to protect against inflation. Because because US dollar and cryptocurrencies are no longer backed by gold, so meaning that governments can actually print their way out of that, and with printing of money, inflation will happen. So gold is there to help preserve purchasing power. So this is the key thing to note. And second, also central banks have already been accumulating gold over the past few quarters based on data from what we see. And we expect this to further continue because of de-dollarization. So all these are the key things to note, because where gold actually is favorably positioned for long-term growth, there will be a lot of ups and downs, volatility in between. But think of the role of gold as portfolio insurance to be able to hold value and preserve purchasing power. So this is a role of gold, to preserve purchasing power, rather than to worry about whether you buy on day one and after that you trade and sell on day two, this kind of concept. Yeah.
Okay, so next question that we want to ask is, how different will this ETF be compared to the other popular gold ETF? Because some ETF are not backed by physical gold, some of them might be not accurate in pricing. Any main differences? And why is IAU the BlackRock one? Why is IAU, the ETF management fee, even lower than GLD ETF? So is IAU not allocated fully or fully insured?
Okay, for different gold funds, the key difference is they bought their gold. Actually, most of the gold funds, they bought their gold in UK because it's where actually the largest gold market, which is the London Bullion Market Association, LBMA. UK is the largest gold market in the world. So most of them, they actually bought their gold in UK. At the same time, in UK, there have been a lot of histories of confiscation. Singapore, and that's why we choose to buy our gold in Singapore. We could have actually bought our gold in UK. And if we bought our gold in UK, we can probably launch last year already. We don't have to go through all the infrastructure, go and do all the Singapore vault visits and all those stuff. But we chose the harder way. We bought all our gold in Singapore to be able to, because it's a geopolitically neutral jurisdiction. It's more for thinking for the long term for investors. If you wanted the shortcut, we bought in UK or even US, there's an existing template for many funds. You could launch it long ago. But we chose Singapore. It's geopolitically neutral. There's low risk of natural disasters. And at the same time, to offer this added assurance, we fully insure the gold. I don't think any gold fund out there, probably we are one of the very few or even the only one that fully insure our gold against loss, damage, and theft while in custody and transit. And for the many other gold funds, some might charge very low management fees and all these. Some is because they are backed by paper gold rather than physical gold. Second is difference in the jurisdiction they bought their gold in. Ours is purely in Singapore. If it's in UK, actually the vaulting rates, because it's such an established market, the custody rate for the gold actually can be much lower. But we chose the harder way to vault them in Singapore. And there's this Singapore AAA rated premium. This is where actually the Singapore premium comes in, because it's AAA rated, it's geopolitically neutral. So these are key things to take note: Singapore custody and full insurance.
Okay, the next point, question is, when do you think the ETF potentially can be traded in CPF funds, if ever? And is the UT tradable in CPF? And next one is, if they already hold the unit trust version, can they convert into the ETF?
Okay, I think for CPF IS inclusion, there has to be a 3-year track record. Once it has 3-year track record, then we can apply for CPFIS inclusion. But I think considering that Spider Gold, which is GLD, they already are CPFIS included, highly likely eventually once we hit the 3-year mark, CPFIS, CPF board hopefully will also include us within CPFIS. Then so right now it is not yet CPFIS included, but we have plans to apply in future once it hits the 3-year mark. The other question was
in the UT convert to ETF.
Okay. Right now, if you hold the UT, there's no switching allowed, so you cannot convert from UT to ETF. So currently this is not allowed, but holding the UT is good because you already since 1st December, probably by now, if you invested back in 1st December, you have made 18%+ profit already, or even 19% in terms of profit. Or whether you want to consider switching to gain access to real-time liquidity, real-time pricing is an investment decision. I wouldn't advise you directly, but if that's something you prefer, maybe you have the discretion to know what you want to do.
Right. So the next few questions, there are some that is more targeted on the application process. Let me just answer some of them first also. All right. So one of them is the platform to apply. So of course, POEM's platform is one of them, and we of course prefer if you apply through us, but undeniably there will be also other platforms available to apply, especially the OCBC owns platform. But do note the promotion. If you compare, I think I'm really safe to say ours is the best, if not one of the best incentive they can get along while applying for this IOP process. Okay, so if you have an account and it's not cash account, you can already apply through the method I've shown just now. If you are holding a cash account, you have two ways. One is convert the account into an eligible cash management account, or you open a separate account just to apply for the IOP. Right? If you open a cash management account, it's in time and you can still apply for IOP. And the shares will also be deposited into CDP at no cost addition to the, there's no additional fees, I mean. Okay, so there is the applying. And the next question will be then for Xun Xiang.
Yeah.
Does the ETF have any distribution, like dividends? And does the gold fund and the ETF have exactly the same underlying asset?
Okay, in terms of underlying asset, it's backed by the same gold portfolio. So this part really covered. The other question was
distribution.
Oh, okay, gold doesn't pay income, so we won't have distributions. If we ever pay income, probably is where that means actually there's gold derivatives, paper gold at the back, because only paper gold. Let's say you do gold option premium, then you can pay income. Gold doesn't pay income, and we expect to continue this policy because it is meant to be an inflation hedge. So if let's say whenever there's inflation, I mean, even though you don't get the cash back directly, it's an inflation hedge. It helps to preserve purchasing power. So this is where actually the potential capital appreciation is actually built into gold and gold ETFs. So think of it more as a tool to preserve purchasing power in an environment where interest rates might be falling, in an environment where money printing goes crazier, and also in a world where it gets more rainy and stormy, like what you see within the Iran war.
Question: why not you're saying like flight to safety? Why not just sell US dollar and buy Swiss franc instead? Because Swiss franc is so flight to safety and it tracks gold price very.
But Swiss franc is also a paper currency. Yeah. Gold is the
backed by the gold. Switzerland is one of the largest buyer of gold.
They are buyer of gold, but their currency is not backed by gold. Until now, I think no paper currency in the world is really backed by gold. So gold is the ultimate safe haven that is still considered money for past 5,000 years, and it continues to be this long-term store of value. So all the paper currencies in the world, like Sing dollar, all these, they are not backed by gold. They have
US dollar to buy the gold. Swiss franc is not US dollar. So if you say de-dollarization, then just sell your US dollar, buy Swiss franc instead.
I mean, all these are investment decisions. It's just that those are paper currencies. You sell one paper currency, you won't buy another paper currency. That one is FX trading. This one is building gold exposure within your portfolio to preserve purchasing power. So I would see them as two different concepts. I mean, there are some investors that prefer maybe the paper currency route. So that one, in that kind of case, then maybe a gold ETF compared to paper currency, maybe they would prefer paper currency more. But for a lot of different investors, if they believe that inflation is going to continue, geopolitical risks and tensions are going to keep rising, then gold probably could be a better safe haven compared to different paper currencies to preserve value and preserve purchasing power.
During the IPO period, you only buy in US dollar, but
Yes.
after the period, you buy in Singapore.
Yeah, you can. Yeah, you can. During the initial offer period, you can buy in US dollar. After that, you can sell. You can sell in Sing dollar. You can buy in US dollar. Buy in Sing dollar also. After that, it's fungible. You can buy sell in Sing dollar, US dollar. So meaning you can buy. During initial offer period, what you get will be GLU. After that, you can choose to sell in GLS. Choose to sell in GLU. After maybe you sell GLS, then few days later you think maybe I want to buy back GLS. Then you can buy GLS, then sell in GLU. It's all fungible, interchangeable.
Okay, so this part I may expand a bit more before I move to the next question. Just be careful is even though you can trade in both GLS and GLU, your CDP statement or your holding platform might only show GLU as the holding ticker. Okay, because they are the same thing. So they put as one, which the primary they are putting as is GLU. Okay, at least for poems, that's the case. We will only show GLU in one code. Okay, but you can trade in either codes for that quantity. So let's say you hold 1,000 shares of the gold ETF, right? You see it as GLU. You are not restricted to only sell GLU. You can sell the GLS 1,000 also. That's when it's trading. But when you apply for IOP period, it's only apply for the US dollar version, $5 per piece, a share at the initial period, apply and multiple of 100. But once it's listed, it's multiple of one share. Okay? And note, this is very important, is that SRS must be Sing dollar contract. So there's two ways. Some guys might ask me also, there's two ways. One is, if you really don't like the Sing dollar version, you can still choose a US dollar listed one, settlement currency Sing, or trade directly the Sing dollars for SRS. Don't choose US dollar for SRS, you will not go through. Then you will reject and become a cash trade instead. So just be careful of that. If you want to involve your SRS funds for this ETF investment, must be a SGD contract. Okay? Okay, question? Yeah.
The bid-ask spread, what's the target bid-ask spread?
Okay, for our bid-ask spread, we will be in our gold ETF will be in the special category within SGX category A ETFs. So this means that the maximum bid-ask spread will be 0.3%. Maximum is 0.3. And we expect to be as liquid or even more liquid compared to GLD because we have 3 market makers. The underlying gold is tradable globally. We hold the exact same gold, those same 400-ounce bars. So it's exact same gold, it's tradable globally, and we have more market makers. And our entry point is also much lower. So because of this, there could be more volume.
Real examples.
There would be real examples.
$10.
Yeah.
What's the
If it's $10, you times 0.3% of $10 is
That's going to be a 1.003.
right.
If it's $1, then it's 1.003. Yeah. Then if it's $10, it's 10.03. It's 10.003, right? 0.3%. I take out calculator.
$100 is 0.3, so it's $1 is 0.003, right? But $100 is 0.3 ma. So $1 will be 0.003. Yeah.
It's listed in SGX only, no other exchanges.
For now, yes, it will be listed in SGX only with the 2 ticker codes. Yes.
Buy 1 bit of TLD, then it's supposed to be 3 something, 1 ounce of 1 ounce, 1 bit of 1 ounce of gold. This one is $5 is equivalent to
Okay, I think I know what you mean because okay, this 5 USD listing price is, you think of it more like just a reference point only. Okay, when we were thinking, because no one can predict what's the future price on all those. When we were setting our concept was, okay, assuming gold price is 5K USD per ounce, and we set 5, so it's similar to 1/1000 of back then when we were setting it. But I mean, since then, gold price now is 1.1K and all those. 20 March, it could be go back to 5K or it could be another level. So think of it more like it's a reference point compared to the average gold purchase price of the entire ETF. But we set it at 5 USD, so to ensure that it could actually be more liquid because the entry point is lower. And also at the same time, unit trust started at 1 USD. So okay, I mean, okay, assuming, okay, I think maybe I give a more numerical example. Assuming on 20 March, we bought at 5K per ounce for gold. You have 5 USD times 1,000 units. So this means actually you own, your ETF units are backed by 1 ounce of gold. But you won't know what's the average purchase price. I'm just giving a simplistic example. Let's say our average purchase price 20 March is 5K per ounce. You own 1,000, for example, 1,000 GLU units, means you own 5,000 USD worth of ETF units. So this means it's backed by 1 ounce of gold. Yeah. Yeah.
I think the gold price today is like 500 per unit. Then I go and buy.
I don't think GLD also give. I don't. Okay.
You don't have control on GLD.
No ETF gives you control over the gold price and all those. Because it's only tracking the.
They are tracking. They are targeting. They don't give you the exact price. It's not bad. No, it's not.
No.
It's not equivalent. The price is close to. But when you buy more and more of the GLD, same as any ETF, when there's a lot of injections, then the fund manager will buy new gold at a new price. So how do you guarantee that? They cannot guarantee the price that you pay them will be in time to buy the gold at the same price that you pay them. You cannot guarantee that. They will just buy whatever price they can get at the market. Yeah, it's just that their price has been historically very close because they are that old. But here, this one, they will start at 5. They will be starting very near to 1,000 worth matched to 1. So yeah, it's quite similar in nature, but you cannot guarantee. Yeah, there's no one that can guarantee that for you, unless there will soon next time be a benchmark is a guaranteed match switch. But currently there isn't. Yeah. Any question? I say something there. Yeah.
Yes, the holding is in USD. Actually, in different ETFs is the same because the gold is ultimately worldwide priced in USD. Yeah, it's still backed by. Yeah, it's still backed by USD denominated gold. Yeah. Yeah.
US dollar and gold prices.
When
gold go up, US dollar.
Yeah.
Eventually, when gold goes up, but because our holding is US, wouldn't we be looking the exchange? Basically, we want it. Even if we sell, we will want it US dollar. I think not.
Think dollar. Okay.
So, what's your opinion on what the logic of it?
Okay, I think in terms of what you are mentioning, okay, I think what you should see gold is it is a tool to preserve purchasing power. You're right. Gold is priced in US dollar. Even if it's priced in Sing dollar and all those, on the long run, most paper currencies will devalue because central banks can print money. Singapore less lah, much less. US dollar, they can print money, they can print their way out of that. So gold is the way to be able to preserve purchasing power. So in fact, you hold US dollar, you buy gold, means your value is preserved, because whatever more US dollar they print, it means your gold price will just keep increasing. But after that, after you sell your gold ETF units, one day you want to, let's say, convert back to Sing dollar. I mean, most paper currencies, as long as there's money printing involved, they will devalue over time. It's just the pace of devaluation. US dollar, maybe because the intensity of money printing is faster compared to, let's say, Singapore, where we do much less in terms of money printing. Then in this kind of case, then Sing dollar might not depreciate as fast compared to US dollar. But think of gold more as the way to preserve purchasing power, to be able to hold the value of your assets in the longer term. So it should be seen more like think of it more like a portfolio insurance, to be able to hold your purchasing power for the longer term.
Okay, let me add on to that. So very simple. You invested 10K. If let's say now you apply for IOP, right? You're going to invest in 1,000 units. That's 5K US dollar. You know your exact Sing dollar exposure, what you paid for it right now on the 19th and 20th, right? You converted already. So the Sing dollar cost to you is fixed, right? You hold on to it. Later on, when you want to sell, you can choose to sell in US dollar or Sing dollar. If you choose to sell in Sing dollars, there's no more conversion involved. You get Sing dollars directly. The difference of that Sing dollars you get as a sales proceed when you sell to that of the cost is your exact profit and loss. There's no additional cost involved in between. There's nothing in between, like dividend, nothing. So it's only between your purchase and sale, right? So when you mentioned that the depreciation effect, appreciation effect, and then the correlation of gold with US dollar, you will not affect, because why? The Sing dollar price is already moving along with that exchange rate movement. So let's say today, if gold move up by 1% in US dollar, but US dollar also move up 1% against Sing dollar, the Sing dollar price might not move much. You know what I mean? The price will already adjust for the currency impact. Okay? So the value impact is already adjusted for in the Sing dollar listing price that you get net. But if you choose to sell in US dollar, of course, you continue holding US dollar, then you continue holding the FX risk. But once you sell in Sing dollar term, you already negate that FX risk going forward. So you no more FX already. You're only holding Sing dollars after that. So it's only when you're inside the gold ETF, you innately will be exposed to some exchange rate risk here and there. Yeah. If you benchmark the price that way. But technically, gold is just an asset. They have prices in Japan, yen, prices in China, prices in UK and in US. So it's just an innate price. It's not just purely one country. So let's say one country currency really have an issue. The overall price is still benchmarked to hold the gold price a bit more stable. It won't say one of the country from South Africa or South America suddenly go missing, then the price suddenly disappear for gold. They'll just benchmark to one overseas currency to continue the trading of it. Yeah. Any other addition? Okay, so I repeat. So the question is asking on the Iran situation affecting gold price.
I think with in terms of the Iran situation, the macroeconomic outlook, what we will expect is there will be more volatility in terms of gold prices. Because you see, a few days ago, actually, gold price fell on this, I think, second or third day of Iran war. After that, it went up again. So there will be a lot of choppy swings up and down expected. Because all these are based on market sentiment. People are confused. They don't know when the war will end. Because some days there can be more signals that actually maybe the war will end soon, maybe US gonna win and all those. That means where actually gold prices go down. Then there can be cases where because Iran maybe they have further developments where they think maybe there will be further advancements and they strike or have more attacks on all these, then all these might trigger fears of prolonged war. Then this is where actually gold prices might go up. So we expect volatility in terms of gold prices for the upcoming days or even weeks. And with all these, actually the key thing to take note is don't think so much about the short-term volatility. Because in the long run, compared to in the past few centuries, from what we see, gold has been the long-term stock of value because it has survived so many wars. Since the 1970s, there have been 70 wars that have happened big and small, but gold has survived throughout all of them. So think of gold as the way to preserve long-term value rather than the ups and downs in terms of the short-term swings that will happen because they have survived so many wars throughout humankind and also survived more than 5,000 years. So don't think about the short-term volatility, but think about the long-term to be able to preserve value and preserve purchasing power. Yeah.
Yeah, so we are unable to support a cash direct payment to the branches. We still need to be in a trading account that can deduct money from the ledger. So I'll recommend that you visit any of our branches. They will assist you with the setup of an account. They can apply for it. Alternatively, if really you find it inconvenient, then you might use OCBC's own in-house platform through the ATM. OCBC ATM and online banking can apply as well. But if you apply through there, I'm not sure the incentive program. So you can check the program there. But once it's in CDP, it's traded like any stock. So don't have to worry about the tradability of it. So you apply through any platform. It's the same ETF, same listed, can trade through any platform after that also. It's just that you prefer to go through which method to apply. Because the account must be there, money there to deduct. We need a guarantee. A gyro, when we try and receive, it might fail, but we already pass the order to them. Then we cannot guarantee the money amount that we pass to them. We need a guarantee amount to pass to them, the exact amount. Sorry, sir?
Plans to list overseas exchanges and so I noticed some like it's what are the risk factors?
Okay, excluded investment product means it's open for all investors in Singapore, all retail investors to buy. If it's specified investment product, means you have to be careful. There's derivatives involved. Yeah, must fill in the CKA, all these. So actually excluded, all our ETFs are excluded investment product. So it's meant for everyone to be able to buy them because meant for retail investors. If it's SIP, then you have to fill in the customer knowledge assessment. Risk factors for gold, all those. I think key things to note is that first, like what this gentleman mentioned, I mean, when there's wars, there's volatility in terms of prices, in terms of gold prices. It's something to take note. No one will be able to know what's the future price. But all this volatility usually is for the short term. But in the longer term, when there's central banks accumulating gold, it's a stored value for the long term, for centuries. And when there's this broad trend of de-dollarization and gradual diversification away from USD, so all these will be the long-term structural drivers for gold to hold its value. So I think all these are, in terms of risk factors, they are more short-term. But for long-term, it's expected to hold value and preserve.
Sorry.
For the incentive, the minimum holding period, yes, this one is 1 month until 30 April.
Yeah.
Yeah. So is the thing you need to take note of.
But it's a choice. You can choose to still sell. Just that if you sell, you might not be eligible for promotion. If you hold on and able to hold on all the way for 1 month period, then you will get the incentive from the promotion. Okay, so for time basis, I really need to end this. But if you still have burning questions, no worries. Feel free to come down. We can still answer your questions here. So I thank everyone for joining us for this event. All right, we do have further events coming up. All right, so we hope we can see you for other events as well. So thank everyone. I'd like to carry all any barang or rubbish that you have around you. Help us to clear it as well. Okay.
Yeah.
And also, if you want to apply to get the NTUC voucher, do look for our colleagues outside. They have a form ready for you. If you wish to apply on the spot, you can do so. And if you have decided to do a $250,000 US, all right, you also can guarantee yourself a slot at the 1 gram gold bar. Because currently there is definite availability. Later on, we're not sure. Thank you.